Welcome to the Inside Technician. This is Jeff Killian, and today's presentation is on the correct application and interpretation of Fibonacci ratios as they're applied to single stock trading, and moreover, swing trading, incorporating the four-step process that we use exclusively here at the Inside Technician. Now I'm going to connect these two data points, the first primary data point being a previous high this day right here, and the subsequent low on this day here. Here's our first data point. We move down to the second data point here. We release, and there we have it. What we have just laid out, according to Fibonacci retracements, are potential for the retracement of prices from a low back to a previous higher point that are extremely reliable and profitable. Now let's take a look at what happened here on the day that I actually initiated Fibonacci. So let's back up to this date, and you can see exactly how I viewed the possibilities of where the stock might go based in isolation on the Fibonacci retracement levels. This day right here where I connected it, I was sure that I had a clean, solid base to go from. Now as time unfolds and we move into the future, every day counts, because every day is part of the setup for the trade where we can get back to the possibilities of this level at 1042, a 23.6% retracement, 38.2 being 1064, and more importantly, a 50% retracement level at 1082 based on these previous price levels here. Now, let me expand this here a little bit, and you can see more clearly how a 61.8% retracement lines up with 1099 right here. 50% lines up with this price level that was hammered out here. 38.2, clearly these 2 days right here, and 23.6, the open of this day right here. So now from a professional's point of view, I'm looking to get back to a minimum of 23.6, moreover 38.2%, and my ultimate goal is to get back to a full 50% retracement. Now, as time moved forward, the very next day, prices did move up. The next day, they shot right back around down and retraced all the way back close to zero. The next day, they turned right back around again and moved up, crossed through 23.6. At this point, I'm surely looking to get back to 38.2%. The next day, coincidentally enough, no, it is no coincidence, it reached 38.2% at 1064 on the high. The next day, right here, hammered out the level at 38.2% flat, and the next day retraced all the way back up to 1082. Now, anybody can clearly see that prices get magnetized to these levels, and they especially get magnetized to these Fibonacci levels when previous prices are lined up with the levels that Fibonacci is laying out. This is the way to use Fibonacci on swing trading when we're looking to realize a profit target in a short period of time. Now, the way that we swing trade here is we look for a previous high, prices to have shot back down, oversold, 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 form a new base, turn right back around with considerable volume, and prices shoot back up. This way we know we can achieve a very large profit in a short period of time, get out and use these Fibonacci retracement levels for price profit targets for the exit. This is step 4 of the entire 4-step process we use here at the InsideTechnician.com. This was, in fact, my most recent profitable trade. The last trade I made for 2010. I got into stock right here at 1228. I got in at 1043 at about 9:43 a.m. and I got out on 1230 right here at 1077, just after it hit this 1082 level, couldn't pass through and continue upward on an intraday basis, and I got out at noon, figuring that was it. Locked in a profit of 3.2% in 3 trading days. And sure enough, what happened the very next day? Prices moved back down, opened here, slowly moved back up on the last trading day of 2010 to make a marginal gain as compared to where I got out the previous day. So in 3 trading days, 1, 2, 3 days out right here at this level, I got out with a 3.2% gain, full well knowing that that was my target, and that's where I was going to lock in my profit. This is Jeff Killian for theinsidetechnician.com. Thank you for being with me today, and look for the webinars that are going to be providing a wealth of information to every trader investor in 2011. Every Thursday at 7:30, you can join us, learn from it. We're going to get it right in 2011, and we look forward to you joining us.